There is a very persistent illusion in business. It's the idea that a business is defined by what it sells: coffee, clothing, software, services, whatever happens to be exchanged for money. Now, that is not what a business is. That is only what a business does once it already exists. And confusing those two things is where most confusion in business begins. Because a business is not defined by activity, it's defined by structure. We are going to follow a single business, Ground Up Coffee, not as a lifestyle brand, not as a motivational story, but as a fictional organism that evolves over time. It will begin simply and gradually become more complex. From a sole trader, foundations, into a limited company or incorporation, into a multi-site operation, and eventually into something that could, in theory, operate at public company scale. Not because we are guessing any sort of success, but because accounting, financial accounting, behaves the same way regardless of size. Every business, no matter how large or small, is trying to answer three questions. 1. What do we own? 2. What do we owe? And 3. What is left over for the owner or owners? Now that's it. Everything else, strategy, branding, marketing, is built on top of those answers. And the only system that answers them consistently is accounting. A business is not a shop. A business is not a product. A business is not even a team of people. A business is a structured system that records economic activity over time. Now, that definition sounds unromantic because it's accurate, and business, unfortunately, does not care about romance. Two people can do exactly the same activity. They can sell coffee, they can earn money, they can pay expenses, but only one of them will know whether they made any profit, whether they are solvent, whether they are growing, or simply busy. The difference is structure. Accounting is that structure. Accounting does not describe what you intended to happen. It describes what actually happened. And it does so in 3 categories. Assets, what the business controls. Liabilities, what the business owes. Equity, what belongs to the owner after obligations. This is not theory. This is the accounting equation in disguise. Assets equals liabilities plus equity. Everything we do in this series will eventually return to that line. So don't worry too much or ponder too much on the actual equation yet. Just have it in the back of your mind as we work through this series. You'll see the value of this very simple but powerful equation. Most business owners do not fail because they lack effort. They struggle because they confuse cash with profit. They confuse revenue with wealth. And they confuse activity with progress. Accounting exists to remove those confusions, not judge them, to correct them. From the next episode onward, we will begin with a very simple moment. Ground Up Coffee receives its first capital injection. And from that point forward, we will track every change, every purchase, every liability, every sale, every tax implication, every depreciation event, and every financial statement. Nothing will be assumed. Everything will be recorded. Because that is what businesses actually are. Recorded reality over time. Over the course of this series, Ground Up Coffee will evolve from a simple cash-funded idea into a structured trading business, into a limited company with formal reporting obligations, into a multi-entity organization, and potentially a listed company subject to public market scrutiny. Not because we are telling a story of success, but because accounting systems scale regardless of emotion. Now, if there's one idea to take from this first episode, it's this. A business is not what it does. A business is what it records. Everything else is interpretation. And, interpretation without records is just optimism with confidence. We begin the first real financial event. Capital enters the business. Cash becomes an asset. Ownership becomes structured. And the accounting equation is tested for the first time in practice. We move from definition to reality.